Evening, everyone. I'm a little late here on your closing comment, but here it is for Tuesday afternoon, and this is video number 683. Excuse me, and I remind you, if you like the work, hit that subscribe button. Okay, I'm going to get right back on the horse again and say COVID, COVID, COVID. There is no bigger story. This morning and for the last 3 days, I've discussed AstraZeneca, which now has been not turned down, but has requested NIAID and the CDC have requested more information. Very unusual for the FDA. The stock closed $49.40, down $1.80 on the news that their information may have been incomplete. They may have used outdated information that was not really in total, ended a month and a half ago, or possibly before. On top of that, we have Germany and the Netherlands both continuing to expand lockdowns. And the upshot of that, as you can see by the chart on the screen of oil, excuse me, there is a question about the amount of oil demand and the demand risk, as well as massive supply that is there. I'll get back to that in a minute. News-wise, we had new home sales down 18.2% for the month. This is more a problem of supply and rising cost, because new home sales are generally thought to be the first step. A lot of starter homes, when you have extremely overpriced labor, lumber, copper, and land, you don't build a lot of entry-level homes. So that was a big negative. Now, as far as the market goes, the Dow was down 308. Last night, I warned you that the market internals were negative, even though the market was up. I believe we were about 1.3 to 1 down in the Dow and 1.4 to 1 down in the Dow. And that volume had also been down, even though the Dow was up 103 and the NASDAQ was up 163. Well, that was reversed today, although not all that dramatically. As I said, Dow down 308, or 0.9%. The NASDAQ was down 149 and change, or 1.12. And the S&P was down $30, or 0.75%. The biggest loser, clearly, was the Russell, small cap stocks. When there's a question of slowdown in the economy, it is those small and micro caps in the Russell 2000 that really get hurt. And they were down, as I said, 81.16, or 3.58%. Transportations were also down 261.96, or 1.85%. So pretty ugly. But you can see, as I mentioned, this oil chart on the screen should give you a little bit of an insight into what's going on in the economy. What was different today was that the volume, the advanced declines on the New York were 3 to 1 down, almost 6 to 1 down on the NASDAQ, but the volume was also a little on the light side. What was not on the light side was the advancing declining volume on the NYSE, which was almost a 90% day. That is generally a blow-off. That is generally about as bad as it gets. You don't see a lot of 90% days without a bit of a bounce. So as far as groups, we had, as I said, the microcaps down 4.5%. And we had Powell and Yellen today in front of the House Finance Committee. And as usual, they said absolutely nothing. Zero. Waste of time, energy, and money. Powell, we're going to do whatever we need. Yellen, we think we may have full employment by 2022. In other words, no changes whatsoever. Basically nothing. As far as sectors, we had strength in utilities, which is not unusual on a day like today, flight to safety. The bonds were also up about $1. Real estate was up, and consumer staples were up. On the downside, we had financials, materials, industrials, and of course, energy. Interesting thing about that is that this market is beginning to seriously reward stocks that would normally be considered value stocks. And in that group, I put a lot of the material stocks because, number one, they are raw materials. Number two, they're generally natural resource based or commodity based, both of which are going through a strong bull market, as I have been saying now for 9 months. And industrials tend to perform really well during a value phase in the market. On the earnings front, we had Intel beating this afternoon. After the close, the stock actually had closed 63.48, down 215, but not only did they beat, but they gave really good guidance. They brought some people on who are more production oriented, and the stock was rewarded after closing 63.5. It jumped up to 68.42. And the last was 67.88, which is up 2.25 or 3.43%. GameStop, GME, everybody's favorite short covering or Reddit or meme stock. It really didn't matter that they missed. Their same-store sales were up about 6.5%. But the stock had closed 181.75. Let's remember that less than a year ago, this stock was $4. It closed 181.75, down 12.74 or 6.5%. And then on the news that they're, basically missing on earnings and revenues, the stock fell to 151. The last is 159.30, which was down 35.19 or 18%. Again, the numbers here really mean nothing. This company is now trying to load up its board and its officers with people that they probably should have hired 5 years ago and changed the focus before their stock went down into single digits. And one of my favorites, Viacom, closed down $9.09 at 91.25 yesterday at regular hours, and then fell a little bit more, nothing overwhelming, another $1.50. The last is 89.75, down 10.58. If you recall, I mentioned this the other day as being part of the big auction on NFL games. They spent $23 billion over a 10-year period, and the reason that the stock is down is because they're doing a $3 billion offering of common and a convertible preferred stock in order to pay for at least the first portion of that. Not surprising at all. And I'll remind you that we paid $18 and change for this stock. So 89 3/4 down 10.5 is not overwhelming. We have been selling it in small pieces all the way up. I believe we still own 50 shares, which is worth more than the entire position cost. Okay, as I mentioned, the oil closed 57 and change here, 57.76, down 380 or 6.7% after trading as low as 57 1/4. I mentioned this morning that it concerned me. Well, I've been mentioning it because of this rounded little top and the fact that we went right through this blue line, which is the 20-day moving average, something that hadn't happened since last November. Every time it hit it, it bounced up, it hit it, it bounced up, it hit it, it bounced up, it hit it, it bounced much higher, came back down, made a new recovery high, and this time went right through and all the way to this orange line, which is the 50-day MA. And today we closed even below that. I would say this is an area of pretty strong support. As I've pointed out, I think 57 and then down all the way to well, let's just call it 55, 56. But as I mentioned, there's a question about the amount of demand, the lockdowns in Europe, and in fact, Carnival Cruise also down a chunk today on the basis of the fact that they are pushing out even further. They're starting to cruise, and their European cruises, specifically their Costa, C-O-S-T-A, their Costa line, which operates out of Italy, also continues to cancel cruises. The gold was down 13, not overwhelming. It seems to be really trying here. It is basically unchanged tonight. Here's a look at the chart. We seem to be trying to hold this area here at 17 1/4, 1700 to 17 1/4. Tonight we are trading exactly 17 1/4, 0.60, up $0.50, not really much, but we have crossed back to the upside on these moving averages. If we could close above this close right here, which is 1741. Today we had a high of 1742, so it's not like it's unobtainable, but we really have to break out above 1750 to get us back on a bullish footing. Bitcoin, after falling hard and looking like the rally here might be over, really didn't have a terrible day. It's down 680 tonight, but given where it's come from, we hit this 20-day moving average. We are at support at 53,000. Today's low was 52,915, so we hit the line and started back up again. Nothing overwhelming. It was kind of a short range day, but let's recall that last week we traded as high as 61,255, and now we're basically back down to 52,009. So we've paired quite a bit off this, 16% off this, and as I said, we're in support. This was the resistance before, when we had a range of 53 on the high and 45 on the low. Previous resistance becomes support, which is clearly showing 53,000. If we break below that, I think we probably go to 48,000. If we break back to the upside, this thing has 68 or 70,000 written all over it. Okay, as far as news, tomorrow morning we have durable goods, IHS manufacturing, index, the service PMI, and mortgage applications. So I'll be back first thing in the morning. Hope everyone had a good day today, and don't forget to subscribe.